Thank you for watching. Today we're going to talk about using the RSI index and the force index technical indicators to determine the next buy signal in the stock market. I want to thank you for joining us here today. There's basically two types of evaluations of stocks. One, there's a fundamental analysis and a technical analysis. We're going to be focusing on the technical analysis here today. Let's just take a moment and we'll take a look at the fundamental analysis, what that's all about. First of all, let me just say this as a disclaimer. Past performance does not always equal future performance. It could be much better. Okay, so let's take a look at fundamental analysis. This is what comprises a fundamental analysis. It's looking at some of the fundamentals of the actual company, like positive return on assets, positive operating cash flow, higher return on assets, cash flow from operations. So these are types of fundamental analysis. What we're going to be talking about here today is technical analysis and how it can help us find the next buy signal in the stock market, either using ETF funds or using the individual stocks themselves. So thank you for joining us again. My name is Richard, and we're going to get started here in just a second. First thing I wanted to just say is that we're all about providing valuable information to help you accumulate a nest egg for retirement, build your financial wealth, and I thank you for joining us here. So we're going to focus on the RSI here today and also the technical indicator, the force index. Let's just talk about these two indicators here. First thing, the relative strength index, this is out of stockcharts.com, is a momentum oscillator that measures the speed and change of price movements. RSI oscillates between 0 and 100. So this is a oscillator that measures momentum. The force index is an indicator that uses price and volume to assess the power behind a move or identify possible turning points. So these are two good indicators that I like to use along with a base indicators that which we'll also talk about here in just a moment. Okay, so what are the two most important indicators to use? One, price is king. Price in the direction of the stock value is the most important key, and the second one is patience. Patience equals profits. I found over time, if we just be patient and wait for our signals to develop, we'll eliminate a lot of frustration and increase our profits in the stock market. So we're going to be looking at the technical indicators: price, momentum indicator, RSI, and force index, which measures price and volume. And as our supporting indicators, candlestick patterns, which give us price movement during intraday, the MACD trend indicator, stochastic momentum indicator, and on balance volume, which gives us the thrust in the market. These are secondary indicators for our presentation here today. Okay, we're going to use the SPY here, the ETF for the S&P 500 index, as the stock that we're going to be monitoring here and determining the buy signal, and using the relative strength index and also the force index. So here's the SPY here. Now let me just warn you ahead of time, it's easy to see when to buy when you look at it 90 days to 120 days later. So the key is being able to recognize when a buy signal is before you actually see the buy signal. Okay, so here's the two indicators we're going to be monitoring here today. This is the force index here, and the red is in the negative, let's say, and the green positive. And then the other, in the RSI, we're going to be looking for a break above the 50 line as our buy signal on this. So here's the SPY here, and you can see that this was moving down here in a downward trend here. If to look at the MACD had dropped below 0, So we're waiting for a new buying opportunity in the SPY. Okay, as we said earlier, the first key here is price and, of course, patience. We mentioned that. Wait till everything comes together. But price, volume, and then we're going to be looking at the RSI and the force index. And also the MACD gives us a measure of where we're at in the market also. So here's a case where we've been following this down. All of a sudden we get a spike up in the prices. Volume appears to be increasing by the green bars down here. But if we just start with the first candle, this is a nice candlestick, a bullish candlestick pushing higher, but we need follow through. So the next day we have the follow through to the upside, so that's positive. Okay, versus a nice pop here. Second day we get a doji candle, just a partial fill in that candle, and then we move lower. That would be a fake out, as I call it. But this third day we get a nice long ranging candle. So we're getting some confirmation. We also have volume coming in. So those price and volume are very important. So then let's mark this here. As we're monitoring this, we don't know that this is going to be a great run here before it happens. So we have to monitor these candlesticks on a regular basis. So let's go up here and look. So the third day there, we're seeing that the force index has already crossed over the zero. So the force index had already crossed over looks like even started to cross on the first, probably got a confirmation on that second day. So again, patience here. As this force index stays in the red, we know we need to stay calm. We pretty much have that RSI going along the 0 line or the 50 line, and then it dips down. It creates a new buy signal when to move up. And then we watch our MACD. We get a feel for what's going on. This is a trend also, the MACD. So we see that MACD popping higher. So in this case, this turned out to be a solid move that continued to move on up higher and had a nice result. Okay, let's look at our next example here. This is in 2015, again with the SPY here. So we had this moving down pretty strong. We had a counter trend rally up, and then we came back down, tested these lows, and then we start getting some nice candles. So first thing, price, candlestick patterns. What is this telling us? We get a nice pop. We get some nice follow through here on a long ranging positive candle. The volume is increasing. Now many times the volume can fool you on these charts because sometimes the trading by some of the large companies and big operators, they do it in black pools and it's not always easily measured. And so we also had our MACD down below is trying to work its way up, which is positive. So if we were just monitoring this pop up, we're going to say, well, we're not sure after 1 or 2 days, but this is really significant here on this third day. We got follow through. And then we also see our RSI here pushing over 0, and we got the force index turning green. By the way, I've got the force index and the RSI turned to 21 on both of these. It seems to be a good measure and takes out some of the noise, the fluctuation. So we see here that we've got price, we've got volume, and we have a nice long-ranging candlestick pattern. So this would be a good buy signal. You can see we get a nice run and on this. And then we get a little bit of a market fluctuation here. I like to use stops. So at some point we would have been stopped out here. Let's just see what would happen the rest of this time period on our indexes. So we start to see the RSI weaken. We get a negative divergence. Even though we're at the highs here, our RSI is weaker than it was on the way up. And also we're seeing a weakness in the force index. So those can be some indicators just to give us a little bit of a warning. Now we did get another chance on this one here. It pulls back, pops up. We get a fake counter trend rally. Let's see what happens to our indicators. We did not get a buy yet on the RSI and also the force index. And so then down here we test these lows. Many times you can make an entry level position, buy position down here. If you see the right candlesticks, here we get a hammer candle forming. Not the greatest one in the world, but it is one. If I was to pick out a hammer, this is a nice hammer candle here. We did get a pop, but the rest of the charts weren't ready. Again, patience equals profits. So we start getting some buying. We get a nice gap up. We got long ranging candle. You got to get excited here. So let's just see what happens here on this candle. We got the MACD pushing higher, okay, and so we're trending up. And look at this. We've got the force index starting to turn green, and then we've got the RSI. So really, probably a day or so after we had this gap up, we started really getting the move higher. So again, we get a nice move up. I'm not sure how much further this goes, but it's definitely a profitable trade. Typically, these trades we're talking about here could go for weeks to months, unless, of course, we get a fake out. Okay, here's another scenario here with the S&P 500, and this is in 2011. We're going to go back a little ways here, and this is a little bit challenging here because we get a lot of fluctuation. There's times that, especially if there's been a strong move down, you can get some fluctuation that follows. But in this case, we moved lower. Again, here's a counter trend rally. Let's look and see where we're at. We're pretty much all red at this point. The RSI is not breaking over the 50 line. And so we try these lows again. It looks like it's a possibility here of moving higher. We get some nice candlesticks, and could be a possible fake out there, but it's just not there yet. And then eventually we come down. We have higher low. We can't break below this. And now we get a charge to the upside on the SPY here. Let's see what this looks like. We did get some good volume in here. Let's take a look here. We got the force index going green, and we have the RSI pushing higher. And we also have our MACD moving higher. So this turns out to be a real nice trade for several months. Okay, let's look at a scenario here. This is the trading action as on the day we're recording this. So we have some interesting information and charts to look at. So with SPY's been coming down really hard and lots of volume here. And look what we have. We have some information here today. We have a long ranging candle with some green inside there. Nice buy. So the question is this a place to buy? This is December 26th, 2018. Now, it does looks like it's good. It's got some potential ingredients here of a buy. Now let's check the rest of our indicators. We're still in the red on the force index, and the RSI hasn't made it yet. So typically in a downtrending market like this, coming down hard, a big long-ranging candle like this, and we had a 5.05% day to the upside. Those are really types of candles you're going to see in a bear market. A bullish market, you're not going to find your candles like that. You get these, you can actually get some nice moves in the market where you find some less volatility. So this is a high volatility area. I don't see a buy signal here yet. Let's look at our MACD. Look at this. MACD really needs to do more work. Now the histogram's starting to turn higher. And if a person bought here, what could happen the next day? This thing could come right back down. So we have to be patient here. This is where we said patience equals profits. We don't have a buy signal here yet. Now, a person could always maybe get a pullback here and start some small positions and have a stop if it does break lower. That's what I would call a speculative type purchase. Okay, more of a beginning purchase with the possibility of moving higher. So just to review here, we're talking about the using the RSI and the force index to help us with determining when the next buy signal, using these technical indicators to help us. I want to thank you for watching.